I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is a major provider of water and wastewater in the US. There are a few things that we literally can't live without, and no, the internet doesn't qualify, even though some might think it does. But water, our most precious resource, yes, we literally can't live without it. Well, this company provides it, and in doing so, it's racking up more revenue, increasing its profit, and paying out a growing dividend. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. Getting back to the stock I'll tell you about today though, perhaps best of all, it looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of American Water Works Company, Inc., which appear to be trading at a significant discount today. American Water Works Company, Inc., stock ticker AWK, is a utility company that provides water and wastewater services in the United States. Founded in 1886, American Water Works is now a $24 billion by market cap water utility giant that employs more than 6,000 people. American Water Works provides its water, approximately 93% of fiscal year 2022 revenue, and wastewater, approximately 7%, services to roughly 14 million people across 14 different states. By customers, this is the largest publicly traded water and wastewater utility in the U.S. The company's main segment is regulated businesses, which accounted for 92% of last fiscal year's revenue and comprises the core water and wastewater utility operations. A small component of the company is unregulated, serving 18 different military installations on long-term, usually 50 years, contracts. American Water Works is essentially a regulated water and wastewater utility business that primarily serves residential and commercial customers. While it might not feature explosive growth prospects, this can still be a highly appealing long-term investment. The main reason? Well, it comes down to what that American Water Works is providing to millions of customers. That what is something I'd call liquid gold. Whereas oil had that moniker for the last century, water may take it for the next century. I say that because we can't live without water. It's our most precious resource, and for a variety of reasons, it's becoming more expensive and difficult to get it. There are all kinds of things that one could live without in a modern day society. Maybe one wouldn't like to live without things like a smartphone or internet access, but one literally cannot survive without water. However, because the business is heavily regulated, American Water Works cannot take unfair advantage of the situation and charge its customers whatever price it comes up with. There is a lid on the price the company can charge for a resource with ceaseless demand. Indeed, the company estimates that its monthly water bill to its customers is less than 1% of median household income. When you can charge a low price for something so vital, the value proposition is extremely high. Reliably providing a precious and required resource at a low cost is why American Water Works has been around for more than a century, and it's also why the company should be able to continue increasing its revenue, profit, and dividend for many, many years into the future. To date, the company has increased its dividend for 16 consecutive years. The 10-year dividend growth rate is 9.8%. There's been a minor deceleration in dividend growth of late, but American Water Works has consistently increased its dividend at a high single-digit rate, say 8% or so. Along with that dividend growth, the stock yields a market-beating 2.3%. This yield, by the way, is 70 basis points higher than its own 5-year average. With a payout ratio of 58.4%, backed further by a product that must be consumed for life, this dividend is about as safe as it gets. Very solid dividend metrics here. Good yield, strong growth, and plenty of safety. Looking at business growth, American Water Works advanced its revenue from $2.9 billion in fiscal year 2013 to $3.8 billion in fiscal year 2022. That's a compound annual growth rate of 3.1%. Fairly middling top-line growth here, but much of it can be explained by a dip in last fiscal year's revenue, which was due to the company's decision to sell its homeowner services group unit, a warranty and homeowner services business, for nearly $1.3 billion in late 2021. The company's most recent quarter showed an 8.3% year-over-year gain in revenue, and that may be more indicative of what's actually occurring. Meanwhile, earnings per share grew from $2.06 to $4.51 over this 10-year period, which is a compound annual growth rate of 9.1%. Now, the company did record a one-time gain for fiscal year 2022 from the HSG sale, but this doesn't seem far off from what American Waterworks has been producing over longer stretches of time. The company has been mildly dilutive with its shares over the last decade, but a nice expansion in margins has really helped to drive some excess bottom line growth. Looking forward, CFRA believes that American Waterworks will compound its earnings per share at an annual rate of 8% over the next 3 years. That's a very reasonable take on things. American Waterworks has repeatedly publicized its long-term targets that include 7% to 9% compound annual growth rates for earnings per share and the dividend. CFRA is simply splitting the middle here, and I think that's an appropriate stance. Backing this view up is recent guidance from American Waterworks, calling for $4.77 in EPS at the midpoint for fiscal year 2023 and $5.15 in earnings per share at the midpoint for fiscal year 2024. That $5.15 number is almost exactly 8% year-over-year growth compared to the fiscal year 2023 midpoint guidance. What is helpful to keep in mind about American Waterworks, which totally differentiates it from a gas/electric utility, is that it's not limited to a geographic footprint. American Waterworks is employing the serial acquirer playbook to slowly consolidate the industry, expand its reach, and build out a water and wastewater empire. It routinely acquires smaller municipal water and wastewater systems, such as the recent City of Donohue's water and wastewater systems, for nearly $1.8 billion. In fact, American Waterworks completed 26 regulated acquisitions in 2022 alone. So you have what's already a powerful business model providing a resource people literally can't live without, and then you're adding to it the powerful serial acquirer model. Being able to stretch out geographically while still maintaining those localized monopolies is what makes this business much more appealing in my view than a power utility business. I'm willing to accept this 8% growth mark at face value and use that as my base case. That sets up American Waterworks for like dividend growth, and you're starting that dividend growth journey off with a 2% plus yield. Assuming no detrimental change in valuation, that positions shareholders for approximately 10% annualized total returns from here. On a business with incredible revenue visibility from locked-in customers with no competitive alternatives, I think that's rather appealing. Moving over to the balance sheet, the company has an okay financial position. The long-term debt-to-equity ratio is 1.4, while the interest coverage ratio is approximately 3.5. Its senior unsecured debt gets investment-grade credit ratings, A, S&P Global, Baa1 Moody's. I'd say the balance sheet is the one glaring blemish for me, which is a similar case for all utilities, but American Waterworks can safely carry a lot of debt due to the annuity-like stream of its revenue. This is as close as it gets to a recession-proof business. Profitability is decently robust for a utility. Return on equity has averaged 12.1% over the last 5 years, while net margin has averaged 21.7%. ROE is juiced by the debt, so keep that in mind. Overall, there's a lot to like about this business as a long-term investment. Upgrading aging infrastructure, passing on higher fees, and adding inorganic growth through acquisitions are easy growth levers to pull over the coming years. And with economies of scale, localized monopolies, high barriers to entry, regulatory support for profit recovery, and entrenched infrastructure, the company does benefit from durable competitive advantages. Of course, there are risks to consider. Litigation, regulation, and competition are omnipresent risks in every industry. This is a rare business with essentially no competition in its service network. Regulation is a double-edged sword. Regulation caps profit to eliminate the possibility of price gouging, but regulators put a floor under the business by allowing a recouping of investments through higher service fees to customers. The company's acquisitive behavior requires management to be prudent around purchase pricing. There are execution risks stemming from the integration of acquisitions. Accessing water due to natural changes may become increasingly challenging and difficult for the company over time. I see some risks worth weighing, but the overall risk profile of the business seems more than acceptable, and with the stock down 35% from all-time highs, the valuation also looks more than acceptable. Stock is trading hands for a PE ratio of 25.3. In absolute terms, that's actually not super appealing. However, water utilities have alluring durability, resiliency, and visibility of revenue. And that high degree of confidence and growth has allowed the stocks to command premium multiples over the years. The stock's own 5-year average price-earnings ratio is 33.2. In light of that, relative to itself, the stock actually looks cheap. The cash flow multiple of 13.7 is also well off of its own 5-year average of 18.9, and the yield, as noted earlier, is significantly higher than its own recent historical average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 8%. That growth rate is as high as I'll go, but it fits perfectly here. The company's long-term guidance, which it's living up to, calls for 8% annual EPS and dividend growth at the midpoints respectively. Also, the near-term forecast from CFRA calls for American Waterworks to compound its earnings per share at an annual 8% annual rate over the next few years. And the company's long-term demonstrated EPS and dividend growth have both been over the 9% level. Nothing is guaranteed in life or business, but it seems awfully likely that American Waterworks, which has been around for more than a century, will continue growing its profit and dividend at a high single-digit rate for many years to come. The dividend discount model analysis gives me a fair value of $150.82. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value money, since a dollar tomorrow is not worth the same amount as a dollar today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates AWK as a 4-star stock with a fair value estimate of $142. CFRA rates AWK as a 3-star hold with a 12-month target price of $143. I came out just a bit high, but we're all in the same neighborhood here. Averaging the three numbers out gives us a final valuation of $145.94, which would indicate the stock is possibly 16% undervalued. Here's the bottom line, guys. American Waterworks Company, Inc. has something close to a recession-proof business, providing customers with a precious resource they literally can't live without. Continued consolidation, infrastructure upgrades, and steady rate increases nearly guarantee more growth for years to come. With a market-beating yield, high single-digit dividend growth, a moderate payout ratio, more than 15 consecutive years of dividend increases, and the potential that shares are 16% undervalued, long-term dividend growth investors looking for a sleep-well-at-night investment with highly recurring revenue ought to consider this business. And now for a special news announcement. Emerson Electric Co., stock ticker EMR, recently surprised the market with a stronger than expected Q1 report that showed an old giant waking up with new growth. 22.3% year-over-year revenue growth, 56% year-over-year adjusted EPS growth. The stock popped 10% on the back of the report, but because the stock hasn't been a massive performer over the last several years, nothing about the valuation is egregious. Could this be the time to take a serious look at old Emerson Electric? Perhaps so. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check out the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.